September, unlike August, because so many traders think August is the weak month, that is not the case. It is September.
Starting points, Tesla stock is up more than 1,000% since 2018. It has an average annual gain of around 60%. Their market cap has rocketed to around $700 billion from just $60 billion over that same period.
A bit of a freewheeling stage of the lithium boom at the moment. What are the factors that are driving this?
Well, the key driving factor is the clean energy transition and the sudden explosion of interest from car makers in going electric.
Tesla, for a car company, which people didn't think any car company could ever have a market cap like that, so it essentially went so far above and beyond what was really possible.
All that and more, so let's get to it. Tesla stock up in the middle of the trading day, patiently awaiting Nvidia's earnings. I think it's safe to say that the entire stock market hinges on these earnings. Single-handedly, Nvidia could pull us out of our stock market funk and get us back into that raging bull market we've been experiencing since the beginning of the year. Likewise, if Nvidia should suffer a fate worse than death, we could see the stock market entrenched in this epic pullback.
In the stock market, there's an event called the September effect, and the impact of it goes back years. In the month of September, on average, the Dow Jones Industrials fall 1.08%, the S&P 500 1.12%, and the Nasdaq 0.85%. History, of course, does not foretell the future, and there can always be exceptions. However, September, unlike August, because so many traders think August is the weak month, that is not the case. It is September. But no one mentions that after September, it's not uncommon for October to start picking up, and you go into the end of the year with the Santa Claus effect, which is often a rally.
Some valuable information about what you might be able to expect in September, but past performance does not necessarily mean it will be replicated the same in the future. These are just data points on how things operate typically in the month of September. But this will be the first September where artificial intelligence is playing a major role in the markets. Hell, it's been fueling this bull market of 2023. Can it buck the trend? Just some food for thought.
FOMO. So we are looking at Tesla, which was into yesterday's open, actually having 6 down days, and it broke that trend with a nice 7.3% move higher in Monday's session.
Which is really, really impressive. And Tesla sort of was asleep, it seemed like, and quickly awoke and you know, it reminds us that it's kind of the trading giant that it is. You know, one of the biggest companies in the world, certainly, if not the most active, certainly makes an argument for being that alongside the Nvidias and the Apples of the world. But, you know, I thought it was extremely impressive, too, because of all the chatter around China. You guys were just talking about that. It's not China is optimistic. It's like malaise in China right now is kind of the sentiment. This is a company that is more and more exposed to China as time goes on. You know, they only made in their last quarter, the quarter ending in June, 45.5% of their revenue in the United States. The rest of it's international, and 23% of that international revenue is in China itself. So it's still, 2 to 1, China to or U.S. to China, but China's an increasingly important part to Tesla's story.
No question, the woes of China have been weighing significantly on Tesla stock, acting as a depressor, if you will. 1/5 of Tesla's revenue coming from that of China. But when you consider it is the major export hub of Tesla, more than 50% of revenues in some way, shape, or form can be attributed to the Shanghai plant. So the fears of a weakened China are not misplaced. I just think they're heavy-handed.
Now China is the second largest market in terms of the automotive industry, so it's also just a pivotal market for other companies, but Tesla has a sizable exposure to that. We did see Tesla's shares fall pretty substantially when we got news last week that China had reduced its rates for the second time in just a matter of 3 months. This was unexpected. We saw names like Li Auto, NIO, XPeng also sell off last week. So Tesla is down about 13% now in the month of August, but they're not the only one. I mean, names like Alibaba, Alibaba is down 14%. Even Baidu, it's making a nice move higher today, is down 17% this month. JD.com, and of course, all of the Chinese EVs. And then you move more regional, and you look at some of the weakness we've seen as of late in names like Rivian and Lucid Group. I mean, Tesla, I do think, has weathered the storm moderately. I mean, they are still down about 13% month to date, but now with two nice sessions, they are giving up some of their strength in real time, but still in green as we speak right now. Now, as of Friday's open, Tesla shares were off their highs by almost 40%. And then at that current level, unchanged since 2020. This is wild to me. So Tesla's stock did close Friday at around $215 a share, which was a level they first topped back 32 months ago. So it's interesting to say then you could say the last 32 months have been a wash, but also for starting points, Tesla stock is up more than 1,000% since 2018. It has an average annual gain of around 60%. Their market cap has rocketed to around $700 billion from just $60 billion over that same period. They also did become the most valuable auto company on the planet.
Woo! Spitting fact. Oh, I don't think she's done yet. Keep going.
Bringing EVs to masses now with some tax credits. They're one of actually the most affordable EVs out there, just given now the different reductions you can actually mitigate when buying an EV here. Tesla's market cap did peak around $1.3 trillion back in December of 2020. We've since seen a pretty steady decline since then. This name is still, though, one of the best performers in the S&P 500 this year. It's up almost 90% year to date.
Preach.
It's fallen 26% from its high, so it's recovered off that 40% level. But Alex, what we do know is this name, it moves, and it moves almost every single day, with or without news. I do feel like there's news every single day, just given that Elon Musk is very active across his social platform and just active as Tesla's CEO. But it is interesting to sort of evaluate some of the different valuations this name has faced just over the last several years, because it has moved with such velocity and such swings. And I do think that Chinese market is one that's important to take into consideration. It's not Tesla weakness, it is a broader macroeconomic weakness that to me is weighing on shares at this point.
Your mother f***ing right. The beautiful young woman gets it, ladies and gentlemen. Damn Skippy, she laid the opportunity out nice and flat.
I think you summed it up well. When it comes down to it, this is a volatile name and it's an active name. So far today, nearly 100 million shares traded. Yesterday, 135 million. Day before that, 136 million. You get the picture. For context, a name that I think everyone agrees is an active name is Apple. Apple, so far today, has traded 24 million. So you have 4x the volume in Tesla just today alone.
What?
Basically, in lockstep with that on a daily basis, 2, 3, 4 times the volume in a name like Tesla versus Apple, which is kind of ubiquitous with widely held, widely traded, widely watched as one of the biggest companies in the world. Tesla, though, you made some comparisons, or at least call outs to names like Rivian or Lucid. Those names could compare themselves maybe to Tesla in like 2005. Like, they're just not comparable at this point.
Damn! Look at the bullish balls on these two anchors. I'm loving it. Tesla never gets this kind of love, and this is after a significant pullback from just a month ago. Oh yeah, cash register, you're speaking my language.
That tipping point where you can say it might be worth less, it might be overvalued, you can say that it's gonna change the world and it should be worth more. But I really don't think that there's that many serious calls at this point, absent any major surprise and lack of information that we have, that Tesla could go out of business in short order. And not to say that each one of those other names that I mentioned are in that spot, but I think that's a risk if you're an investor in a name, Lucid, Rivian, some of these newer up-and-coming names. Like, if they don't get to that scale, if they don't get those vehicles produced at a faster rate and people aren't buying them, like, they might not exist. Like, that is a real risk, and Tesla had that risk for a while, but it's past that point.
I completely agree, and I think that's the argument to be made about people say, do you value this as an auto company? I think no at this point. I think that's not even arguable, because they have all these different offerings. They have FSD, they have their North American charging standard, which is now partnered with some of the biggest legacy autos, of course, Ford, GM, and they also have now their battery production, their solar production. I mean, the list just goes on and on. This is not truly a pure play into autos anymore. And I think that scale and that reach into this broader market is one of the reasons they have lasting power, frankly.
Woo! It's getting hot in there, boys. I can't believe all of this bullish talk about Tesla. Yeah, I say it's hot and getting hotter in this month.
A bit of a freewheeling stage of the lithium boom at the moment. What are the factors that are driving this?
Well, the key driving factor is the clean energy transition and the sudden explosion of interest from car makers in going electric, and for that they need lithium. It's a very, it was previously a really niche market. It's now becoming something quite different, and so you've just got all of these very small, often miners, going out looking for lithium deposits.
Niche market, but now something more. Painfully obvious that it is something much, much more than it once was a few years ago.
So what should we be looking out for, James, when it comes to separating the losers and the winners in Australia's lithium race?
Well, investors tell me, who know what they're talking about, tell me it's all about, it gets quite technical, but basically you want a really fantastic big deposit of spodumene, which is lithium ore. And it needs to be close to the surface. It needs to be kind of, if it's in an accessible part of the world, Australia is a great place because it's a very stable jurisdiction. Other places might be a bit less stable. So they're the kind of things, basically it's one thing to have a good deposit. It's quite another thing to get it out of the ground and get it to market. So that's kind of the key, but it gets beyond that, it gets quite technical.
James, lithium right now dominated by small and mid-sized players. You'd think that this sector is really set up for consolidation. What are you watching in terms of M&A?
Well, this is really interesting about lithium because it really is one of the hottest commodities on the planet. You look at its growth trajectory, it's going to just go up and up and up as car makers increasingly go electric and phase out their gasoline-powered cars. But strangely, the really big miners so far have pretty much stayed out of it. The only one of the massive ones that seems to want to get into it is Rio Tinto. So the M&A activity is often some smaller ones merging with each other to become larger. We can certainly expect a lot more activity, but the really big question, and I think if you're holding lithium stock, this is the thing you'll be really interested in, is are we going to get the really big players coming in, because they're the ones that can pay big money. So it's going to move very fast. And the other thing also is car makers are also getting involved.
What?
As you know, is Tesla going to become a miner? So that's another one to look out for.
Tesla already in the lithium refining business. Getting into the mining? No doubt. Whatever Tesla decides to put their minds to, they'll take a page from LL Cool J because they'll be doing it and doing it and doing it well. But they've got bigger fish to fry. If lithium becomes a serious enough bottleneck, they'll also take a page from Marshawn Lynch because they'll be all about that action, boss. Beast mode.
Super quickly, I cover emerging markets, especially LATAM, and I come from Bolivia. So I've been watching the lithium triangle of Bolivia, Chile, and Argentina as well. It's not all about Australia, right?
Yeah, absolutely not. So it's a different kind of lithium, well, a different sort of way of getting lithium in that part. It's brine, it's kind of contained in water underground, whereas in Australia it's in the rock. But that's certainly, Argentina, Chile already is the second biggest producer of lithium. Argentina has a lot of projects, so Argentina is going to become big over the next few years. Canada also is becoming a really major player, and some really promising deposits are there. And Africa as well. It's everywhere is looking for lithium.
Lithium itself is all over the place. Highly refined lithium, that's what's rare. I don't know how many times I've heard Elon Musk say, if you get in the lithium business, it's basically a license to print money. Mine it, refine it, do whatever you gotta do, but you will print money if you get into the lithium business. Tesla doesn't want to do it, but they will if they have to.
Next guest poses the question, is Nvidia the new Tesla? Let's bring in Gunjan Banerjee, lead writer for the Wall Street Journal's Markets Live and a CNBC contributor. Thanks for joining us. There's great things about momentum stocks, Gunjan. If you get in early on one of those and you let it ride and you don't cut your profits short, it's a beautiful thing. And it's momentum combined with underlying fundamentals that are exciting. There's no doubt that Nvidia with AI It's a great story to tell. But we're talking about a company that was worth $250 billion. It's now worth $1 trillion. Yeah. When do the laws, it just seems like I don't want the whole market hinging. It's the linchpin of the market and it's already quadrupled. That seems dangerous.
You know what'll really be dangerous? If you don't get your hands on these chips. Imagine the gold rush in California. There's gold in them there hills. The prize is the gold. What Nvidia is selling are the picks and shovels necessary to mine that gold, which is the monetization of artificial general intelligence. The ones selling the materials to acquire that invaluable piece of gold made quite a bit of money. That's Nvidia. Now, I'm not saying Nvidia won't be out there mining their own gold, trying to seek their own fortune. But right now, their job is selling the picks and shovels. Who's buying these picks and shovels? To mine for artificial general intelligence. The first one to pull that golden nugget out of the ground, those will be the primary benefactors of this artificial general intelligence gold rush. Don't get it twisted. The picks and shovels are in high demand and are fueling this 2023 market bull rally. But there's an opportunity beyond Nvidia.
You know, the stakes are high after the closing bell today, not just for Nvidia, but the entire market. This is the best performer in the entire S&P 500 this year. And people are really piling into the stock ahead of its earnings, and the expectations are high. You know, you're seeing people pile into the options market, turning to ultra bullish trades tied to the stock, jumping to 600, jumping to 700. You're seeing analysts raise their price targets on the stock as well. You know, the most optimistic of the bunch recently raised his price target to $1,000. It's under $500 right now.
What?
So you're really seeing this Nvidia casino thrive ahead of its earnings. And that's what reminds a lot of traders of Tesla, where, you know, Tesla similarly is one of the most popular trades in the entire options market. It's you know, become this entire casino of its own with a ton of momentum trading behind it.
The expression "nothing grows to the sky, no tree grows to the..." Apple did. Apple grew to the sky and then went through the sky and then went up into the atmosphere. And Tesla, for a car company, which people didn't think any car company could ever have a market cap like that, so it essentially went so far above and beyond what was really possible. I guess that's why it keeps happening again and again. But is there the possibility there's an air pocket at some point under Nvidia? Is there hype around AI or not, Gunjan?
Look, everyone seems to be drinking the Kool-Aid this year, and it's not just Nvidia. You know, Nvidia's blockbuster earnings results in May really kickstarted this frenzy that's dominated much of the year. You know, Nvidia contributed to more than 1/10 of the S&P 500's total return through July. So it's really brought a lot of the market along with it, and that poses risks as well, right? In August, we've already seen stocks kind of mired in one of the worst slumps since March, and this is a market that's in need of a catalyst. You know, we're facing rising yields. A lot of people are questioning, has the AI mania gone too far, too fast? How real is this thing? And that's what makes these earnings results so important after the closing bell. It does seem for now, though, that a lot of people are just fearful of missing out. You know, they want to play short-term gains in the stock. That's why they're turning to the options market. That's why they may be buying the shares ahead of earnings. And that helps explain what the 8% pop in the shares on Monday alone. And it looks like the stock is up again in pre-market trading. So people are saying, if this is the next Apple, if this thing is going to continue, if AI really does change our world, we don't want to miss out.
Can you imagine back in 1995, those individuals saying, "Oh man, what's this? The internet? What the f is this?" Not realizing that it would change your life fundamentally. That's what artificial intelligence is. This is happening, people. The applications of AI at this level is astounding. With the computing power of these Nvidia chips in the right hands, could solve for artificial general intelligence. I don't have to tell you who I've got my money on. In conclusion, September is typically worse than August when it comes to the stock market, but the stock market has never seen a catalyst like artificial intelligence. Tesla stock may be down for the month, but you best believe the most valuable automotive company in the world ain't going nowhere. And does Nvidia possess the tools to send this market bull rally into another gear? I sure hope so. Well, that's all I got for you today. Be easy. Peace.